You ever see a financial report like this and just feel your eyes glaze over? It looks like a secret code, right? Well, today we're going to crack that code. We are breaking down a real technical analysis report on Tesla to figure out the story the numbers are actually trying to tell us. Okay, so let's put on our detective hats for the next few minutes. Our whole mission is to decode the clues hidden inside this thing piece by piece so we can build a really clear picture of what's going on with Tesla's stock. And here we go, our very first clue. And it's the big one, $448.98. That was the closing price for one single share of Tesla on October 23rd. This number, this is the anchor for everything else we're about to dig into. And here's the second key fact that gives that price some context. The stock was up more than 2% on this day. So, at a quick glance, the story seems pretty good, right? Positive. But the real story, as you're about to see, is buried just a little bit deeper. So let's start with the absolute basics. A quick snapshot of what happened on this one day. This is going to give us our first major clue about how the stock's been behaving and what the overall mood of the market is. Now here's where it gets really interesting. Look at the volume. 126 million shares were traded. I mean, that's over 50% higher than the recent average of 80 million. See, when you get high volume on a day the stock goes up, it tells you something important. It says there's a lot of conviction, a lot of strong interest behind that move. The stock isn't just drifting up, it's being actively pushed higher. So you take all that data together, a high price, a strong gain, and all that trading volume, and it leads the report to a really simple, one-word conclusion for the overall trend. Bullish. But what's the actual evidence that backs that feeling up? Okay, so how exactly does the report build this bullish case? To really get the why, we have to look past just a single day's action and bring in one of the most fundamental tools in all of technical analysis. So what in the world is a moving average? Well, think about it. A stock's price jumps up and down every single day. It's a ton of noise. A moving average just smooths all of that out. It lets you see the actual direction the road is heading, instead of getting distracted by every little bump and pothole along the way. And this right here illustrates the bullish case perfectly. Check it out. Tesla's current price of almost $449 is above its average price for the last 5 days. And it's way above its average price for the last 200 days. This is a classic textbook sign of strength. It shows the stock is strong right now. And it's even stronger when you compare it to its longer-term trend. But, just like in any good detective story, there is a twist. Just when we think the case is solved, other indicators in our report start flashing some pretty serious warning signals. The story, it turns out, is not quite that simple. Okay, so let's talk about the Relative Strength Index, or RSI. The easiest way to think about this is like a speedometer for the stock price. It doesn't just tell us if the price is going up, it tells us how fast it's going up. Is it a gentle climb, or is it a frantic, all-out sprint? That's what the RSI helps us figure out. And this is Tesla's RSI score from the report, 76.57. Now, it's just a number, it doesn't look like much, but in the world of technical analysis, this number is a huge piece of evidence. So why does this one specific number matter so much? And there it is. There's our big warning sign. An RSI of 76.57 is well into what's called overbought territory. So while the trend is positive, this one indicator is basically screaming for caution. It suggests the buying has been so intense that the stock might be running too hot and could be vulnerable to a correction. This slide, this really gets to the heart of it. This is the central tension of the entire report. It's a total tug of war. On one side, you've got these powerful bullish signals, like the price just cruising above its moving averages. But on the other side, you have that flashing warning light from the overbought RSI, suggesting this whole rally might be running out of gas. So with strong evidence pointing in completely opposite directions, how does an analyst make a decision? Well, they don't just guess. They try to synthesize all this conflicting information into summary scores to weigh the evidence as objectively as they can. And this chart really shows us the verdict. The main technical score, which combines a whole bunch of indicators, is a perfect 50 out of 100, exactly neutral. It's the report's way of saying the bullish and bearish forces are perfectly balanced right now. But then, the report also calculates a risk-reward ratio, which it says is favorable. This suggests that even with all the risks, the analyst thinks the potential upside is still greater than the potential downside. So how does this all come together in the end? What's the final forecast? Well, the report doesn't pretend it can predict the future with 100% certainty. Instead, it boils down all of this analysis into 3 separate scenarios, and it even assigns a probability to each one. And here they are. The report gives a 50% chance that the bullish trend keeps going, but, and this is a big but, that also means there's a combined 50% chance that it either stalls out and trades sideways, or that those bearish warning signs win out and the price actually starts to fall. And to make it even more concrete, the report lays out the specific price levels you should watch. In that bullish scenario, the price could be targeting $470 or even higher. In the neutral one, it might just bounce around between these key support and resistance levels. And in a bearish outcome, it could fall all the way down to find support around 425. These aren't just random guesses. They are key battlegrounds that will signal which scenario is actually playing out. And this quote from the report is pretty much the whole story in a nutshell. It mentions a few indicators we didn't even cover, but it perfectly sums up that core conflict we found. A bullish trend backed up by the moving averages is fighting against that overbought warning from the RSI. And the final judgment? That favorable risk/reward ratio still points to potential upside. So, the crucial point to take away from all this is that technical analysis isn't about finding a single perfect answer that predicts the future. It's about being a detective, weighing all the conflicting pieces of evidence to understand a whole range of possibilities and probabilities. Which leaves us with a final thought. In a world full of conflicting signals, maybe the most important skill isn't finding the right answer, but asking the right questions.